Hello, greetings everyone. My name is Gustavo Smith, and I would like to welcome you to this technical session on behalf of María Soledad Flint, Head of the Accounting and Public Finance Division of Contraloría General in Chile. This activity is organized by Chile as the current president of FOCAL, and we would like to warmly thank Agustina Llambi, Senior Manager of the IPSASB, for her collaboration in the presentation of the exposure draft 90 and 91, currently in consultation period. Please feel welcome to post your questions and comments in the chat of this meeting. I would also ask you to post your country and organizations so we can know who is connected. And after Agustina's presentation, there will be some time to address your messages and questions. So without further ado, we welcome Agustina.
Thank you so much, Gustavo, for the presentation. It's a pleasure to be presenting this overview of ED90 and ED91 to the different members and participants from the Caribbean region. And with that, what I'm going to be doing is sharing my screen so you can see the slides and the presentation. So just one moment, and it should be up shortly. So one thing that I would like to say is I believe this is my first presentation that I do for the region in English, which is usually the language that I use at the IPSASB. So it's a pleasure doing that with you. So today, mainly we're looking to discuss ED90 and ED91. This too is ED90 is amendments to IPSAS as a result of the application of IPSAS 46 measurement. This is one of our IPSAS that discusses and it's a one-stop shop for all of our measurement information when you're measuring your assets and your liabilities. And there was a second phase to this project, which is ED90. In today's presentation, we're going to cover the overview and the scope of the exposure draft. We're going to discuss current operational value, which is the main measurement that was added at different IPSAS because of this exposure draft. Then we're also going to touch on definition of accounting estimate, which is a new definition that was added or is being proposed to be added. Then we're going to discuss current value measurement disclosures and what changes are proposed there from ED90. And then we're going to discuss the specific matters for comments that the ED has. On ED91, it's a little bit more brief because pretty much this exposure draft is about enhancing and streamlining and improving IPSAS 33 to make it more user-friendly. So I'll quickly be giving updates of what is proposed on ED90 and discuss the specific matters for comments. So let's start with ED90.
Agustina, excuse me, we can't see your presentation. Could you share it again?
Yes, let me redo it again. 1 second. Let's see. This is what happens. We do a lot of testing before, and then it happens that it doesn't work. Okay, so let's see again. Can you see my screen right now?
Yes, now we can see it. Thank you.
Okay. And now if I put presentation mode, you're able to see the presentation still?
Yes.
Yes, okay. Okay. Okay, it continues to present, right?
Yes, please, Agustina.
Okay, thank you so much. Okay, so on ED90, amendments to IPSAS as a result of the application of IPSAS 46, pretty much this quick slide just show us what is the scope of the project. So it's divided into 4 pieces. Part 1, which is part 1 and part 2 are connected, but a little bit different. It was added current operational value, which is the new measurement that IPSAS 46 introduced last year. And I'll touch a little bit more just as a refresher on what current operational value is on the next slide. But what you're going to see is that the IPSASB on this particular project, what it did, it looked at all of the IPSAS that currently allowed a current value measurement. And what do I mean by this? So I'll use this as an example. So in IPSAS 45, where the IPSAS discusses the recognition, the measurement, the presentation, and the disclosure of property, plant, and equipment, an entity is able to select the subsequent measurement of property, let's say a building, using current value model, which allows for current operational value or fair value. So this project, phase two of it, and part one of this scope exposure draft, analyze whether current operational value as a current value measurement should be added in other IPSAS beside IPSAS 45, where it added last year. So this conclusion from the IPSASB is that current operational value should be added in IPSAS 12, which is inventories, and also in IPSAS 31, which discusses intangible assets. So that's one of the proposals, to add current operational value under these two IPSAS. Additionally to that, the IPSASB, what it did, it looked at IPSAS 21, which is impairment of non-cash generating assets, and consider whether current operational value should replace the existing measurement there, which is value in use. And the conclusion from the IPSASB is that that should be the case. And this is where we see that is kind of like in pretty high level what is proposed in part one and part two of the exposure draft. Then we have two other portions of the exposure draft, which are smaller amendments because it's more from an improvement perspective. So one of them is part three, which is the addition of a definition of accounting estimates into IPSAS 3. And then we see part four, where the IPSASB should streamline terminology on current value measurement disclosures. Okay, so this is kind of like high level what the overview and the scope of the ED is. Then we see, I had mentioned that I wanted to talk about current operational values just for clarity, because it is a new measurement, and the IPSASB acknowledges that it got introduced last year when IPSAS 46 got published, and the second phase expanded where entities can elect or may need to use current operational value. So what is current operational value? The definition it reads as is the amount the entity would pay for the remaining service potential of an asset at the measurement date. And there's like 6 key principles that define or explain and describe current operational value. First, it relates to is the current asset, meaning an entity has an asset which has a certain condition and state, and the measurement looks to determine the current value of that asset, not an improved asset, not a different asset, not a modern equivalent. So what do I mean? So if I suddenly have an MRI machine, which is a 2020 version, but there's a newer version of that MRI machine today, which is more advanced and it has a higher value. Current operational value looks to attain the current value of the 2020 version of that MRI machine, not the 2024 that will be today's version. When we talk about current use, current operational value looks to determine the current use for that asset. And here what is important to highlight is if I have an MRI machine, and this is relevant for the public sector specific, is I can use that MRI machine for service potential or for financial capacity, meaning that I might use that MRI machine to generate profits or provide services to my constituents. And that's why it's important to highlight the current usage of it. Then we're talking about it reflects the current location of the asset. So this may be more relevant when we think on the public sector, the location of a school that is in a pretty metropolitan area. That is surrounded by other buildings that are pretty expensive, but obviously governments have to provide education to all of their population, and they will need to have schools in really expensive areas of the country. And what it's trying to say in this case is we want the current value of the asset in its current location, not in a potential cheaper location or even a more expensive location. So they're just trying to focus on that. The other principle of current operational value is it has to be entity specific, meaning is the amount that the entity would pay. And this is to contracts with fair value. So fair value is the other current value measurement that you can use across the IPSAS literature. And fair value usually is about an exit price. So it's not an entry price, it's an exit price. It's what somebody else would pay you. And that definitely is different from what I would pay. And this is where the principle entity specific and entry value is important, because it's about what the entity will pay as opposed to what the entity will receive from a third party if they sold that asset, let's say. And then the last one is least costly manner. Here we're referring to, there's several ways how an entity can obtain an asset, because it's important to highlight that current operational value is a measurement only for assets. It's not meant for liabilities. Here, what we're looking to say is an entity can purchase an asset, an entity can build an asset, and the entity will need to consider what is the least costly manner to obtain that asset. An entity can buy, let's say it has potentially a good example that I like to use is like there's a fleet of vehicles that an entity needs to purchase, right? But let's say there's a smaller entity, and that smaller entity only needs to buy one vehicle as opposed to the larger entity. So because current operational value is an entity-specific value and it's the least costly money value, it needs to take into consideration what is the least costly manner that the entity can access that. So if I think of a large entity that has a large purchasing power where it will buy 10 cars, potentially it will get a discount on the overall purchase of 10 cars, as opposed to a smaller entity that is buying just one car. So that will contrast the least costly manner when it comes to that purchase or the value that you will give to that asset. So I think it's important to kind of highlight what current operational value is. Then the reason why I'm showing this particular slide is because of one of the specific matters for comments on the ED. Because when we have current value models and when we have current value measurement basis, there's different techniques, measurement techniques that an entity can use to derive that current value, being current operational value or being fair value. So under current operational value, there's two techniques that the entity can use, is market or cost approach. Okay, so that's why it's important to highlight. While fair value, for example, has three measurement techniques. It's the market approach, the income approach, or the cost approach. And it's just a quick, briefly discussion on this. If we think of the market approach, it will be what potentially is the price of that asset in the market. If I think of the income approach, it will be thinking of the present value of this cash flows that I will have to pay for an asset. So I could potentially, if I'm trying to determine the value of an entity, I could see what are the revenues in the future and present value those two today to determine what is a fair price for that company. If I think of the cost potentially, if I think of a building construction, I will need to determine what are the different outflows that I need to have to construct that building. And I could bring those to present value to determine that value of that building. So that's kind of like giving a brief summary of current operational value, because part one and part two of this ED 90 look to see where else does current operational value need to be added to the IPSASB literature. Okay. So now getting to exactly what, where current operational value was added, it was added in IPSASB 12 of inventories, I had said in early slides, and in two aspects. So when we think of IPSASB 12, and we think of organizations in the public sector, there's many times that the entity will purchase inventory, and therefore it will recognize it at its cost, or it would actually receive inventory in a non-exchange transaction. And by this, we mean potentially a donation or be given inventory at a price that is less of what would be in the market. And the IPSASB discussed the addition of current operational value at initial measurement for non-exchange transactions. And the logic here follows similar to what it was done on IPSAS 45, for those of you that are familiar with this new standard that was published last year, is that at initial measurement of an asset, an entity will need to determine whether I use that asset, being in this case inventories, for operational capacity or for financial capacity. And depending on which of those two capacities you use it, the initial measurement of inventories acquired in a non-exchange transaction would either be measured at current operational value, which this ED is now proposing to add into IPSAS 12, or fair value. Now, additionally to that, current operational value was added on IPSAS 12. Well, it's proposed to be added. So this is where we need to get your feedback to see whether constituents as yourself agree with that proposal as a subsequent measurement for inventories. So there is a public sector difference from the private sector, that inventories in the public sector, let's say a hospital that provides services to citizens for free, would have inventories, let's say, of vaccines. These vaccines are given to the constituents for free. There is not a financial capacity, it's an operational capacity. And because of that, the IPSASB thought it would be valuable to add current operational value here. When we think of inventories, inventories are measured at the lower of two values. One is the cost, what we pay at the beginning to get that inventory, or in this case, when we're saying that we're distributing these vaccines for free, will be the lower of cost or current operational value. So that's the specific proposal for IPSAS 12 within part 1 of the ED. The next one, similar logic, but for IPSAS 31 and for intangible assets. Similar in the sense that at initial measurement, if an entity acquires an intangible asset in a non-exchange transaction, the entity now with the proposal in ED 90 will be able to use current operational value as the initial measurement for an intangible asset acquired in a non-exchange transaction. At a subsequent measurement, intangible assets the entity has an election. So the entity, when does initial measurement, then it will move to subsequent measurement on day 2 and say, okay, under IPSAS 31, I can measure it at the historical cost value, or I can measure it at the current value model. So in this case, ED 90 proposes to expand current operational value under IPSAS 31 to now allow 2 measurement bases. One will be current operational value if I hold that intangible asset for operational capacity, but in the case that I hold that asset for financial capacity, it will be fair value. This is consistent to what we have for tangible assets under IPSAS 45. So what is doing this proposal in ED 90 is just bringing consistency between IPSAS 45 and IPSAS 31 current value models, and also in bringing, updating IPSAS 12 and IPSAS 31 to the measurement methodology introduced by IPSAS 46 last year. So then the next one is IPSAS 21. So in IPSAS 21, the IPSASB looked at the content of how impairments are determined, and is proposing to update the definition of recoverable service amount in IPSAS 21 to the higher of fair value less cost to sell and current operational value. So now the entity before, so not before, so what you have right now, if you're applying IPSAS 21, you will have the higher of fair value less cost to sell and value in use. So what we're doing in the proposal on ED 90 is to replace that and value in use with current operational value. In my personal view, I think this brings simplicity to IPSAS 21, because under IPSAS 21 today, we have the higher of fair value less cost to sell and value in use. And then value in use has several measurement techniques that the entity needs to determine which one is going to use to do this, to follow this definition of what is the recoverable service amount of my asset. So I think this is kind of like important. So with this proposal, what also means it's not simply replacing value in use with current operational value, but the proposal also removes then the depreciated replacement costs, restoration costs, and survey unit approaches, because those are the approaches that today you have to determine value in use in IPSAS 21. So what else do we have? So the other thing that, okay, I think now the slide move. So the other section that I was talking to you about when I was showing you that first slide, right? When like part 1, part 2, part 3, and part 4. Now we're discussing part 3 of ED90. It has definition of accounting estimates. So this comes mainly from an update from the ISB, the Private Sector Accounting Standard Board, where they noticed that by feedback from constituents and stakeholders was that entities had difficulties differentiating between a change in accounting policy and a change in accounting estimate. So just to provide just a brief background on IPSAS 3. So IPSAS 3, an entity uses this for accounting policies, changes in accounting estimates, and errors. And one of the definitions that IPSAS 3 has today is a change in accounting estimate. But what the ISB realized and the IPSASB also agree with was that it didn't include a definition of what an accounting estimate is, while it did include a definition of what an accounting policy is. And therefore, because it didn't have that definition of accounting estimate, it was creating confusion from stakeholders on the differences between the two and which one to apply. And as you may know, if I have a change in accounting policy, the changes need to be applied retrospectively, while if I have a change in accounting estimate, the changes need to apply prospectively. So it's a pretty significant difference. So it's important for entities to have the right guidance to differentiate between the two. So what the IPSASB on part 3 of ED90 did is propose to add the definition of accounting estimates, which is our monetary amounts in financial statements that are subject to measurement uncertainty, right? And then we say that accounting estimates can be our outputs of an estimation technique, such as the loss allowance for expected credit losses in IPSAS 41, right? When I'm trying to calculate my allowance for different liabilities that I might have. And then we see the other one, measurement techniques, that we were just discussing in a way, when we think of determining fair value through using the cost approach, the market approach, and the income approach. So pretty much part 3 is just a proposal of adding a definition for accounting estimates and enhancing the non-authoritative guidance, such as illustrative examples, to allow entities to differentiate between a change in accounting estimate versus a change in accounting policy. So I think this one is straightforward, I would say. The next one is even more straightforward than part 3. In part 4, the IPSASB noticed that when IPSAS 46 was published, there was an addition of current value measurement disclosures across the IPSAS literature where a current value measurement disclosure was appropriate. But what the IPSASB realized that there was a particular terminology that may create confusion, and as to add clarity, the IPSASB is recommending to remove it. So if you have looked at a current value measurement disclosure, you will see that right now it uses the term recurring or non-recurring current value measurement. And what the ED is proposing is just simply to remove recurring and non-recurring. Because when we go at the specific IPSAS, sometimes the current value measurement is either recurring or non-recurring. And only in limited cases, you might have both recurring and non-recurring. So part 4 of ED90 is just bringing more clarity and simplicity to the current value measurement disclosure so entities can more easily apply it. So that brings us to the specific matters for comment. And there's 3 specific matters for comment. One of them is asking constituents whether they agree that current operational value should be included for IPSAS 12 and IPSAS 31. The next one is a 2-part question where the IPSASB is asking if constituents agree that current operational value is an applicable subsequent current value measurement for right-of-use assets. And when we're saying right-of-use assets, we're pretty much referring to leases in IPSAS 43. So the question is, do you agree that current operational value can be applied at subsequent measurement for right-of-use assets? And if you agree with A, do you agree that current operational value can be applied using the current guidance in IPSAS 46? And this is particularly important because when IPSAS 46 was an exposure draft, current operational value included more than 2 measurement bases. So I'll quickly just go back to that slide because I think it's helpful. So current operational value could be determined by using the market, the income, or the cost approach during the exposure draft. But once the IPSASB received feedback from constituents, it concluded that it would only allow the market or the cost approach. With the addition of current operational value in this second phase, specifically for right-of-use assets, the IPSASB is just getting confirmation that entities do see that you could still use the current operational value without having the income approach as one of the measurement techniques. And the third question is whether entities agree to replace value in use of non-cash generating asset with current operational value. So those are the 3 key questions. With this, I think I want to highlight, and I know Focal is always doing a great job on this part, is that we want to get your feedback on the exposure draft. It was published back on August 1st. Similar to all of the due process the IPSASB follows, they get published. They are open for comments for 120 days comment period. And this comment period will be closing on November 29th. So I would like to ask you to provide us your feedback because this will impact how you're preparing your financial statements going forward. So it's so important to hear what you think about this. And the presentation will be shared with you. So this QR code that you have here on screen is something that you could check later too to get you the submission page. So with this, I'm going to go to discuss ED91. So ED91 is a limited scope update of IPSAS 33, the first time adoption of accrual basis international public sector accounting standard. So ahead of getting into the slides, the limited slides that I have to discuss this, I just want to kind of give some background what IPSAS 33 is. So firstly, IPSAS 33 got published in 2015. And the purpose of publishing IPSAS 33 is to support public sector entities in their transition to accrual IPSAS. So what do I mean by this? So it's to support entities in their transition to accrual basis IPSAS, meaning that you're currently in a different basis, such as the cash basis, or you're doing partial accrual, and you're looking to transition into IPSAS accrual-based ones. So you have to be on a basis to move into IPSAS 33, to utilize or benefit from applying IPSAS 33. It's important to highlight that in contrast to other IPSAS, IPSAS 33 does not provide recognition, measurement, presentation, or disclosure requirements. Rather, IPSAS 33 looks to support entities in their transition to IPSAS, accrual IPSAS, and therefore it provides exceptions, which we're going to get on what is the time frame that you can apply it. So just to kind of clarify, let's say that the entity has a building and it needs to recognize it, measure, and provide disclosures. You wouldn't apply IPSAS 33, you will apply IPSAS 45 from property, plant, and equipment. So let me show you a diagram that I think is so important to highlight. I think, I know the focus of this session was to discuss it with the Caribbean, and not everybody necessarily is on IPSAS already or on accrual basis accounting. So I kind of want to highlight what is the purpose of including this diagram. So this diagram, what it's trying to show you is kind of showing this like three phases in a way. So if I look to the left, we call it the preparation phase. So this is a phase where the entity has to determine what are their assets and liabilities. Do they have a register where they have all of their assets, all of the buildings that the company owns, at the entity, the public sector entity owns? Do they have the right accounting systems to be able to, let's say, amortize a bond that they might have on their financial statements? So the preparation phase is ahead of applying IPSAS 33, meaning that as an entity, I first need to determine whether I have the system to create and produce the right calculations, let's say for amortization, as I was talking, and there's more than just simply that. Do I know all of the different assets and liabilities that the entity has? Do I have the right talent and staff that understands accrual basis IPSAS? Do I need to potentially do training for that staff? Do I need to hire individuals? Do I need to, this is a time where we say I will have to create a project plan. So all of this happens ahead of applying IPSAS, because the purpose of IPSAS 33 is to allow you a 3-year period to provide fully compliance IPSAS financial statements. Therefore, I should already have all of the information ahead of publishing my first IPSAS financial statements. And this is kind of the middle section. The middle section shows you adoption of IPSAS when the entity adopts IPSAS for the first time. And then it shows you its application of IPSAS 33. So if kind of we're focusing on, apologies, I changed, but we're kind of focusing on this section, right? So I'm talking about this. So this is where I'm going to apply IPSAS 33, the transition period. And then after 3 years, I should have complete IPSAS adoption. And then IPSAS 33 no longer applies, okay? So I think it's kind of important highlighting this. So why did the IPSASB did ED 91? Why did they start it? So one of the challenges was that entities thought that IPSAS 33 apply from here onwards, okay? And therefore it created confusion because entities will start getting their registry of assets and liabilities ready, start the implementation of IT, like an accounting system, start training their staff, and they will start applying IPSAS 33. And then therefore, they will run out of time, right? The 3 years will go by quickly because you needed to do that work ahead of it. So that was one of the challenges. There was lack of clarity, or when entities read IPSAS 33, they thought it applied for a longer period, right? For all of this period, as opposed to just simply the middle. Another thing that they noticed is that when individuals, entities read IPSAS 33, it resulted unintentionally in a delay recognition measurement disclosure of certain items, because the entity will kind of say, oh, I have 3 years to recognize my property, plant, and equipment, and I'm only going to start applying IPSAS 45 at the end, right? And therefore, that kind of like a lot of standards got delayed, and it was a challenge suddenly having to do the adoption of all of those IPSAS at the end of the 3-year period. Truly, the intention of IPSAS 33 is to help entities apply it and stop using the exceptions within the 3-year period as fast as possible, as opposed to using them across. So those are the kind of the two focuses. And the IPSASB determined that to address those challenges, they were going to provide and reorganize the information of IPSAS 33. So what you have right now is that In ED 91, the specific proposal is to make IPSAS 33 more user-friendly and effective as to how entities use it. So right now, what they have done is the content of IPSAS 33 hasn't changed necessarily, but how it's presented has changed. So now authoritative guidance is grouped together by topic, same as the basis for conclusions. Then it is encouraged to use IPSAS as soon as possible. So this is something that you will see in the text as you read it. Also, they added non-authoritative guidance to help with the application of IPSAS. Specifically, they added, if you're familiar with IPSAS, on our implementation guidance, we follow kind of a question and answer type of format. So then there's question and answers for the objective and the scope of IPSAS 33. I know one of the questions that I have been asked in the past is whether you can extend the transition period for more than 3 years. And therefore, there is an implementation guidance which says, can the transition period of 3 years be adjusted if circumstances require? And the answer is no, because the transition period is only 3 years. And the expectation is that you're applying IPSAS 33 when you know you will be able to comply with IPSAS fully, and you're using it as a phase approach where the entity has determined a project plan and said, okay, I'm going to do IPSAS 45 on my first year of IPSAS 33, and then potentially I'm going to be applying 47 and 48 in the second year. So you're kind of like determining the phase which requires, right, that I have done this preparation, that I have that project plan determined ahead of applying IPSAS 33. There's a lot of thinking that happens here before I apply 33. So I think that kind of clarity was given by all of this new implementation guidance that walks you through those type of questions on the objectives, the key definitions also that support the application. Another thing that they did is deemed cause was added. The definition was added because in IPSAS 33, for example, when we think of entities that potentially move from cash basis to IPSAS accrual, they haven't been recognized. They didn't recognize a billing, right? Because they weren't on a cash basis. But the entity has had that billing for 30 years. So then the question is, can the entity find the cost of that billing and determine the amortization that you will need to apply? So then what deemed cost does, and I'll read the definition, because deemed cost is an amount used as a surrogate for transaction price at the measurement date. So meaning if the entity doesn't have a cost for that building and wants to apply IPSAS 45 requires you to have it on your financial statement. So then as an exception, what IPSAS 33 allows you to do is at initial measurement, and when you move from a cash basis to an accrual basis, you're now allowed to use the deemed cost, which will be fair value or current operational value of that building as of today, as opposed to having to go 30 years back to try to find that cost. So that's the definition that got added to IPSAS 33 is being proposed to getting re-added, which IPSAS 46 had removed last year. So those are kind of like the key proposals on the standard. There are two specific matters of comment, being conscious of time. Pretty much the question is, do you agree with the proposed amendments where the revised authoritative text and basis for conclusions got rearranged by topic, continue to be the same, they just got moved around to make it more user-friendly? Do you think that the revised guidance improved under stability? So what they had done also is there were duplicated guidance, so they removed that. So they're asking you key questions of how the information has been reorganized and regrouped to make the standard friendlier. And then the second is specific matter for comments is, do you agree with the inclusion of a definition of deemed cost? As I mentioned, I used to be there, but IPSAS 46 refined the concept, and as opposed to duplicate the deemed cost definition, it removed it last year. But then IPSAS 33 said it's such a key concept and it's highly used when you apply IPSAS 33 that it will be friendlier to users if that definition was contained within the standard itself. So it's proposed to be re-added. And then with that, what I want to say is there's a lot of content that I try to cover. I try to kind of highlight, provide you highlights of both EDs. And so it is important to use this QR code to read the material. And this one got published on August 14, and the comment period is going to close on December 13. So I would suggest you provide us your comments. If you grab this QR code for both EDs, this is going to take us to the IPSASB website, where you actually will be able to see the at a glance that gives you more detail than I have given you in this quick presentation. And then, of course, it's always important to read the exposure draft fully, see what is the implications to your entity if you're planning to adopt IPSAS accrual. And then obviously respond, because your response is what shapes what comes out of it, of the pronouncement, right? Because this is an exposure draft, your feedback will actually shape the final pronouncement. So it's important, read and provide us with feedback. I think with that, I'm going to stop sharing screen and see if we have any questions. What I would like to say is, I know it's a lot of content, so happy for you to email me if you have questions separately. I'm always available. Thank you, and I'll pass it to you, Gustavo.
Thank you, Agustina, for your thoughtful presentation. I don't see any questions in the chat. I don't know if someone want to post one now.
I think. Yeah, no, similar to you, I don't see questions. But potentially, as I said, if there's any questions or clarifications that I could provide, I would appreciate you send me an email. I'm one of the project managers of ED90, and then we have Christoph that leads ED91, so I can always get more detail from him on your potential questions. But I just want to say thank you. If there's no questions, happy to get them via email.
Okay, thank you again, Agustina, and thank everyone for your participation. I hope we repeat these sessions in the future. Have a great day.
Thank you, bye.